was another tough night in US markets as sentiment continued to swing against those formerly much loved Magnificent Seven stocks that have led the markets higher over the last 2 years. And the pressure was most evident in the NASDAQ. Now, I must admit, it's such an important time of the market. I was up watching this one overnight. We saw an initial sell-off that took the market to its lows in the first hour of trading. However, over the next few hours, the market seemed to find a little bit of a footing and started to rally back. But with just 2 hours in the session to go, the selling resumed. The NASDAQ finished near its low for the session, down 1.2%. The Dow was also down 1%. The broader S&P 500 held up a little bit better, down just 0.8% compared to the pressure we saw on the other indices. But it's no surprise that the hardest hit stocks were those previously loved stocks that have done so well. Amazon, one of the hardest hit in trading overnight, down 4.4%. Nvidia, ahead of its very important result tomorrow morning our time. We'll talk more about that in a moment. Was down 2.8% in trading overnight. It also traded down to a technical low at $180. It did manage to bounce off that, and that is the smallest and perhaps the only piece of consolation in the overnight action for Nvidia bulls ahead of that result. Micron was also smacked down 5.6%. There was general selling across the tech sectors with the software and AI stocks leading the falls. Now, there will be a focus on the macro a little later in the week in the US. We have the resumption of data from the various government agencies that were shut down for 44 days. Now, what this means and whether we'll get the numbers we're looking for according to the calendar that's been temporarily put up, we don't know. But the non-farm payrolls read, which is due on Thursday night, will be very important. The reason is clear. The whole dichotomy between jobs and inflation and the potential for lower, steady or higher interest rates has been a major driver alongside the AI mania. And so if those US non-farm payrolls come out on Thursday night, anywhere away from what is only a very weak consensus of 50,000 new jobs for the month of September, we could see a very significant reaction, whatever happens with the tech sectors and the Nvidia result. And speaking of the Nvidia result, it will be most important. The expectations here are beyond frothy. And although analysts have done their best to cut the numbers and use the company guidance, expectations are above guidance. In other words, there's a very high hurdle for Nvidia to jump. Now, if it does deliver well above expectations, we could see the whole AI selling that we've seen over the last 5 trading days short-circuited, and we might see further gains and potential new highs for Nvidia. Nothing can be ruled out. But when the hurdle is so high, when earning expectations are for excess returns, in other words, but well above what the company has already guided analysts towards, the potential for disappointment is very real. And I think one of the few positives for Nvidia shareholders going into this is that Nvidia has pulled back from its highs above $220 to be closer to $180. And that takes some of the potential sting out of a buy the rumor, sell the fact result for Nvidia shares when they release their result tomorrow morning, Australian East Coast time. But another area of focus for traders and investors at the moment are the cryptocurrencies. And Bitcoin was hit again last night. It's now wiped out all of its gains for this year and did dip below 90,000 US dollars in trading overnight. We did see a modest bounce back, but the gains that are insignificant against the 30% fall we've seen since that October high above 126,000 US dollars. So a lot of crypto traders pointing to risk-off sentiment as the major cause. There's certainly been steady outflows from crypto ETFs. It does suggest that some profit taking and some rotation away from those top performing sectors could be ongoing. And although they might not necessarily be directly related, the sentiment that we're seeing risk-off trading has spurred both selling in cryptos and in AI stocks. Naturally enough, with this combination of selling of tech stocks and selling of crypto exposures, the crypto companies have been the hardest hit. Now, MicroStrategy, with its 30% fall from highs, demonstrates that leverage cuts both ways. When Bitcoin was booming and Strategy was raising money to buy Bitcoins, its market cap would often go up by more than the value of the Bitcoins that it bought in anticipation of further gains. And that leverage on the way up is now turning into an anchor on the way down for Strategy shares. That 30% fall might not be the end of the downdraft in Strategy. Mara is now down 42% over the last month, and Coinbase, the exchange, down 24%. And so with the Bitcoin holder, the Bitcoin miner, and the Bitcoin exchange all under pressure, it goes to show just where the selling is coming from and the concerns we have about the short-term outlook for crypto exposures. And it's time to move to our watch list. And on top of that watch list is Mara Holdings. We've talked about this stock a lot in the past. It's gone off our radar a little as AI has taken center stage. But as a Bitcoin miner and an owner of around 51,000 Bitcoins, there is some value here as long as the Bitcoin price holds up. But of course, any further falls in Bitcoin are likely to weigh on its shares. Down 30% year to date, down 42% the last month. It's 92% Q3 revenue growth does militate against this. And a little ironically, it does look like it's coming under pressure just as earnings are coming through. On the Moomoo community, it's still rated a buy, and some no doubt will be considering whether or not there's a dip buying opportunity in Mara Holdings. But possibly the biggest event of the next 36 hours is the Nvidia result that will be released tomorrow morning. Down, as I say, almost 3% ahead of that result tomorrow. There are a lot of bullish expectations, but that data center outlook is key. And if Nvidia delivers on the data centers, if they are getting the revenues that booming share price reflects, this will not only support Nvidia's price, but it could support the whole AI complex and might be a short circuit for the negative thinking that's currently weighing on tech generally and AI exposures in particular. Locally, we saw a similar effect. Technology One, which is a software and services contractor mainly to governments, education departments and the like, fell 17% after unveiling its results yesterday. Now, this Australian listing has been listed now for 23 years on the Australian Exchange. It's the biggest fall we've seen in that period on the miss in profit expectations that the company announced yesterday. It's still got a hold rating on it on the Moomoo platform, but some would argue that this stock is overvalued, and the first blush reaction might not be the only negative moves we see in Technology One's share price on the back of this. Now, you might be wondering why I'm wearing a suit and tie today. I'd like to put in a plug for Moomoo Australia. Today, we're going to open our very first retail outlet in Chatswood, on Victoria Street in Chatswood. It's an opportunity for you to experience the Moomoo community in real life. So if you're around Chatswood today, please come and join us for the opening around midday. But at any time in the near future, come down to the Moomoo store, be part of the Moomoo community where you can examine the tools, get information about trading and markets, share information with your fellow investors and traders, and be part of the Moomoo community.